Hello, hello. Hey, Val, how you doing? Hey, Nick, today. Good morning, Jambi. Happy 4th of July. Hey, Rizka, how you doing? As usual, you all know the drill. Give it a couple of minutes. In the meantime, if you can help me out, click that thumbs up button, click that little rocket ship button on TradingView, click subscribe. Let's get more people onto the call. Anyone got onto any interesting trades? Do let me know. Anyone caught the Aussie trade or the Aussie RBA analysis, RBA rate decision? Let me know as well. Couple of minutes before we get going. If you were wondering, market is very choppy. It has been very choppy. So if you haven't had too many trades, I understand. Me neither. Good one, Nick. I hope you were in the Aussie trade to sell it down. I scalped it down a little bit, but not too much. It wasn't a very big or sustained move, and it's actually bouncing right now. So, oh, nice. Got in before the news on the pending order. Good job. Hey, BL, how you doing? Val saw the Aussie move, not a time we normally trade. I would guess that would be very early in the morning, so I wouldn't expect you to have been trading during that time, Val. So best not to rush into a trade if it's not your usual trading time. I do think that it might be a short and sharp session. It is the 4th of July, Independence Day in the US. So it's going to be maybe a little bit quiet. Not late at all. One more minute. We shall get going. Hey, and if you haven't already, do help me out. Click that subscribe button on YouTube. Well, trying to see how many people I can get on my YouTube subscriber list. Hey, Gojo, good morning. Hi, Christina. How are you doing? Alrighty, let's get started. So again, thank you all for jumping onto this daily market analysis. 3 p.m. GMT plus 8 every day, well, weekdays, where we look at the fundamentals, we look at the news that has happened, and what's coming up. Not much coming up because it is the 4th of July and it is Independence Day in the US. But we did just have the Aussie, the RBA with the interest rate decision. So we look into that. We look into the technicals in terms of where price is, where price could be heading towards, and then some possible trade setups. Might not be a lot of trade setups. Markets have been very choppy. We are looking, it is the first week of the month, so there are quite a number of news to be released later on over the next couple of days into next week as well. So, if you haven't if we felt like you haven't been able to enter any trades or found any trades with good confidence, then don't fret, don't worry. Take it as you're watching the markets, getting a feel of how prices are moving. Wait for a clear setup before jumping into a trade, right? Most importantly is always follow your rules. Make sure you stick to it. Don't get too emotional with how prices are moving and trying to rush into a trade. All right. Again, if you do have any questions, any trading related questions, any particular pairs you'd like me to look at, do put it into the chat. Let me know. We are streaming right across several different platforms. I am monitoring, when I'm looking at this side, I am monitoring over all the different chats. So do put it into the chat. Let me know. If you're new to the session, drop a message, say hi, let me know where you're joining from. And I know all the regulars, we are chatting almost throughout the day on our Discord channel. The link is there already for the Discord channel as well. Okay, so let's keep going. Good morning, Minal and Jimmy and Edson. How are you doing? So a quick disclaimer, any information contained on this webinar should not be construed as advice and is presented as educational material only. Please do your own due diligence because the contents of this webinar is not intended to be a recommendation to trade a financial product. Your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. Okay, so with that said, I don't think we're going to have too many trade setups, but before you do jump into any trades, make sure it fits with what you're comfortable with. Okay, good morning, Angel Case. How are you doing? So with that, looking at the news yesterday, not much. We did have a little bit of a surprise here on the US manufacturing PMI number. It was a 46.9, expected a small increase to a 47.2, but it was released lower than expected, lower than previous at a 46. Right, this shows that the US manufacturing industry is still in that contractionary phase. I wouldn't be too concerned about this. Firstly, that is a PMI data. It's not the main thing or main factor we're looking at right now. And also, it's only a small drop between 46.9 and 46. So manufacturing PMI, we saw a little bit lesser than expected, a little bit lesser than before, which led to the dollar. This was at, let me zoom in a little bit. Monday at 10, it's about there, right? So it didn't have too much. It actually had a small drop, and then it came back to that trend line, right? So a small drop and came back to that trend line. So, in the price action view, it didn't even move prices too much on or have a sustained move on the manufacturing PMI front based on that data. Earlier on today at 12:30 GMT plus 8, we did have the Aussie cash rate, right? The Aussie cash rate here. The Reserve Bank of Australia was very nice, did not surprise markets with another rate hike. It kept it at a 4.1%. Right? Why I say did not surprise markets with another rate hike is because over the last 2 months, expectation was to keep it at 3.6. They raised it to a 3.85. A small increase there, and then in June, 3.85 to a 4.1%. there was some consideration in the lead up to this news event that the RBA could surprise markets again with another surprise rate hike of 25 basis points, taking it to a 4.25% or 35%. Didn't happen this time, but if you look at the statement, let's bring up the statement, right? They decided to leave the cash rate unchanged, or that the main thing here is some further tightening of monetary policy may be required to ensure that inflation returns to its target amount in a reasonable time frame. Okay, it will depend on the economy and the inflation, on how it evolves in terms of the economy and the inflation. So what's happening is that the RBA is not ruling out further rate hikes. They're not ruling out further rate hikes right now. Inflation is at 5 point, it's not stated here, but it's at 5.8% year on year. So it is still, it's on the way down, but it's still a distance away from its 2 to 3% target level. If it does continue to decline, if the CPI does continue to decline, then we're likely to see the RBA possibly pause on further rate hikes. If it slows down, if that decline slows down, then maybe further surprise rate hikes to come from the RBA. Because they didn't hike rates, right? Because they kept rates at a 4.1%, what happened on the Aussie dollar front was that we saw, this was the news, it go from 0.6675 down to 0.66 or 0.6645. So a good 30 pip drop. Didn't continue bounce back up because it is still that consideration that people, some portions of the market was pricing in the likelihood of a surprise rate hike. Didn't happen, and it dropped. Right now, pushing back up, also primarily because of the dollar index weakening down to below 103. Okay, so with that, that was the news that we saw at 12:30 GMT +8. Hi Joshua, how are you doing? Good morning, and hi Desiree, good to have you with us. With that, then you can see not a lot of news left to be had. We do have the US bank holiday, like I was saying, a big, massive, happy 4th of July for anyone in that neck of the woods in the US, celebrating Independence Day. It is, or celebrating the 4th of July, it is a bank holiday. So I think that what could happen is that we might see prices of volatility or liquidity slow down a little bit, right? No big news pushing prices. We might see it slow down a little bit. I'm not ruling out the idea that without the US trading, we might see the dollar weaken a little bit further before they come back into the markets tomorrow. Okay, so with that, then onto tomorrow, not much else. Euro services PMI, we'll tell you more about that tomorrow. Together, the pound services PMI, I'll tell you that tomorrow as well. And the OPEC meeting, so if you're trading oil, WTI or crude, that possibly going to have some impact if they do announce any changes. I don't think they're primed to announce any changes of production level at this point. All right, so it looks like it's clear in terms of news, but it might also mean that we might see a consolidation across for prices, not much happening. So looking at the dollar index here, I was getting excited just 1 hour before this session at 2 p.m. when we saw the dollar index. I'll zoom in a little bit. There we go. That might make it easier to see. All right. So I was getting a little bit excited when I saw the dollar index dropping, breaking through that trend line, right? Breaking through that upward trend line. However, we were discussing about this in the office. I do think that as much as it's dropping, 61.8 here as a retracement level is most likely going to hold. Right? So what I think is likely to happen at this point now, right? We're showing some brief retrace, right? Some brief retrace from that big drop. Well, not big, but I went from 103.83 or 103.08 to 102.91. Right? Might retrace a little bit, test that trend line before coming back down. I think that for today, lower liquidity, lower volatility is most likely going to consolidate. If it does come back down, it's most likely going to consolidate along this range at 102.78 or 102.80. All right. So I'm looking at some dollar weakness or some brief dollar weakness for today. If it doesn't happen, I'm not going to rush into a trade. So I think if that could weaken slightly, consolidating at 102.8, around 102.80. Okay, so that's the view. That's the short term. I'm just noticing something as well here on the dollar. So if it does push down, it could see it test and come back down here. Yeah, so I think this will be a good idea. Could weaken slightly, consolidating at 102.80. With that, then expecting that dollar weakness. So this was the Kiwi dollar yesterday. We were thinking that the dollar could strengthen slightly. It didn't happen. It actually found a very good strong support at 0.6130. So that trade did not trigger. Okay, so this is why you need a very good or sound trading plan, or develop a plan that you have confidence with. Is because when you have levels, for example, like that, like that, it's really just levels that it doesn't trigger. It's not going to lose you money. Consolidated and then bounce, pushing to the upside, right? So with the Kiwi dollar right now, I would urge to be extra careful. So now that's broken that trend line. Let me just clear up the charts a little bit. Take all these squiggly lines away. Oops, that away. I'm considering this. Right? I'm considering this view in terms of just like that. In terms of the Kiwi dollar trend, short-term trending to the upside. And if it does continue up, it could find that near term, I wouldn't say it's a resistance. I would say it's more like a interim level at about 0.62. 0.62. Okay, so what you could be looking for here is for it to trade up. And based on this panel, it could trade up to the top and then turn back down again. Right, so some dollar weakness pushing this back down, consolidating along this range. I think that we could see the Kiwi dollar push up to 0.62. But with that said, definitely not a tradable range, very near term, very small levels. Speculative, you could be looking, I mean, this is against a short-term trend, but I'm considering the idea that we saw a big retracement at this point. Right, we saw a big trade to the downside from this point. So I'm considering whether that could happen again. what you could be looking for is a round number 0.62, providing that resistance 618 6190. Stop loss very tight, no more than 20 pips. Take profit could come down to the trend line at about 30 or 40 pips, maybe even 30 pips to the downside. I feel that, or you could even come all the way down at this point, because if it comes back down, a similar move to what we saw on the 27th of June. I feel that this could happen, but it might be a little bit more of a riskier move, a riskier trade. Okay, so let's say sell at 0.6190, stop loss 20 pips, take profit about 40, 50, even 60 pips to the downside, and we would be watching it at about 30 pips. Okay, so sell down 6190, stop loss 20, take profit 60, watch out at 30 pips, which is about the 6160 level. $0.6160 price level. Okay, so what we're looking for here is a trade up, a rejection of that 62 level, and then turning back down. It is retracing back down right now. I'm not too concerned about the retracement, just letting it take time. I think it might retrace a little bit before pushing back up again. If it doesn't push back up, then don't force a trade out. Maybe just forego the Kiwi dollar at this point. Okay. Then the Aussie dollar obviously did not drop. So last night did not drop before bouncing back up. So we'll take that away. It is still trending to the upside again, like very similar to the Kiwi. You would see that push upwards. All right, I am looking. I wouldn't be as adventurous on the Aussie here because it's got a lot more space to that resistance. We don't have a, we got 0.67 here, but it's right in the middle of those levels. So I'm not too keen on trying to see or trying to rush a trade out or try to find a setup on the Aussie. I think that if it does trade up, let me just check how many pips is that. It's 73 pips to the upside. I would not, just because of how the RBA did not hike rates to talking about it. Right now, Aussie does not have that clear driver in terms of where prices should be. Right, you've seen that bit of uncertainty. The news release saw that push back down over the next 2 hours, totally recovered back up. I think that what we're likely to see is for it to trade up to that resistance of 6.5 or 6.756 or 6.760. I would be very cautious. So something like this would be 6.700. You could be looking at a 50 pip to the upside, tight stop loss of 25 pips, just because of that previous high, if it breaks above the previous high. But again, I think it's going to be very choppy for today because of the way the markets are a bit off for the bank holiday. Dollar index still a bit undecided. Breaking out that trend line might come back down. I think that if we do see this test and come back down, then we're likely to see this push up. All right. Again, not ranking very high on the Aussie dollar to the up. I think it's going to get there. I think it's going to move up, but I'm not sure whether it's going to go all the way. Okay. So that's why you probably sense that I'm looking at this as could happen, but it's a bit in the middle, it's a bit all over the place. Also because we have a previous high there at 6722. So there are a few levels for the Aussie to break before it could get to its take profit level. So again, possible trade setup, but don't feel like you have to rush. Not like it's a high confidence level trade setup. Okay, I'm coming to the point where as I'm looking through the day at the way prices are moving, as I'm looking at the way prices could be moving, I think that it might be a day where you sit it out your weight. You might not have a lot of trades for today. Okay, but let's consider the Aussie at 0.67, stop loss 25, take profit 55. The setups are there. We're going to only get in if it meets our setup. Right? So that can take away. And it could very well be the scenario where you don't get into any trades. I'm not ruling that out for today either. So far, so good. Any questions? Let me see. If you are here, type something. Just let me know that it's all working and you guys it's making sense for all of you guys. Okay. Dollar yen again did not do that, so I'll take that away. Did not break for 145. The question is, I think there was a headliner there. Thank you, Desiree. Where was the line? See, Japan's currency diplomat says Tokyo in constant FX dialogue with the US, and US yen bulls I-145 resistance on the 4th of July holiday, right? So US yen question is still at that 145 level. It's still at a 145 level. Is it going to reach again? If it reaches there, is it going to is the Bank of Japan going to intervene? The big question is that at this point of 145. If it doesn't get there, or while it gets there, it's going to consolidate between this range, 144.20 to 145. I wouldn't do anything in between. All right. What you could be looking for is for it to get up to 145. I think that we could be at that point looking for it to trade back down again. Right, a little bit different view to what I've been saying over the last couple of days, thinking that it could break 145, pushing to 146. I think that with the hesitation that I'm seeing right now on the US yen, you could be looking at short-term opportunistic trades down to 144.90. Stop loss tight at about 20 pips. Take profit down to about 60 pips. You're just trading this range, and then you never know that at which point at 145 when you're selling down, the Bank of Japan will intervene and you'd have a big profit to the downside. Okay, so now we're starting to think about preparing or considering getting into position if the Bank of Japan does intervene at the 145 level. So what you can also be doing is looking at, putting 100 pip take profit to the downside and just be ready to close off at about that 50, 60 pip level. Okay, so hope you know what I mean. You're looking to look for it to go up, test 145, turn down, look to sell at 144.90, 100 pips, 20 pips, great trade. And then if it comes down to about 50, you might want to close out the trade without intervention. If there's an intervention, it's going to break that level, and you could be looking to drag take profit further lower. Okay, lots of patience and being disciplined today. Super, that's crucial, especially for today. You're going to see prices move around a little bit. Might try and trigger you to get into a trade, but then the next moment it's going to retrace. Similar to what we see on the yen here. One big drop, next moment it bounces back up. I'm thinking that unless I get a great setup, I'm not going to take a trade. Looks pretty slow at the moment. Spot on, Val. I agree with you 100% on that. Desiree is asking, now with Swiss inflation under 2%, can we say unlikely SMB will want to raise rates further? Could it be pretty toppish? Swiss yen seems very over. Okay, we'll get to the Swiss yen shortly once we get to the US Swiss franc. Okay, so 144.90. I'll get to that shortly, Desiree. Looking to sell at 144.90. Stop loss about 20 pips. Take profit about 100. We're prepared. We're setting up for possible intervention. There we go. All right, I'm not saying that they're going to intervene. I'm not saying that it's going to happen soon. I'm just, positioning. Actually, would be a better word. Positioning for potential, for possible intervention. Okay, so that's the idea for, if it does come down, then, sit it out, wait, unless it breaks that support. On intervention, you could be looking to trade it down. But I think it's going to trade within this range on the US yen. Then onto the pound dollar, right? Pound dollar was very odd. So I was looking at this as this was a trade that I thought was quite possible, as it was breaking out of that consolidation. So I'll take that away. Didn't happen. But it was consolidating along this level. Last hour at 2 p.m. GMT plus 8, it broke out. I was actually sitting there going, maybe I want to get into the pound dollar, thinking that I could buy it up, right, to that, no, not that level, to that level, given that it's broken out of the consolidation. Very similar to a move like that, right? As it bounces off this support level back to that top, I was thinking that as it breaks that consolidation, could it get to the top? Good thing is I have this session with all of you wonderful people, because I thought I'm going to sit up, I'm going to wait till after the session, because I don't want to have a trade running during the session. And what we saw, what we're seeing now is that it's retracing back to this support level. So I would extend this and say the consolidation is within this range. Anticipating that dollar could push and then turn back down. I think that we're going to see it consolidate in here for a little while more. We're going to see it consolidate in here for a little while more. If as a idea, if it does break down 1.2680, stop loss 30 pips, take profit. I don't think it's going to go all the way. I don't think it's going to go all the way. I think that instead of trying to force out setups, I think it's going to consolidate along that 1.27 level. Right? It's going to consolidate along that 1.27 level, so it's not going to do too much in terms of the pound dollar. So maybe just wait it out. um, consolidate along 1.27, look for breakout potential, but I don't think it's going to be today. Okay, not that I don't think it's going to be today. I don't think that a breakout is going to be sustained. So it might break out a bit like what we saw on Monday, right? It might come out, break, and then bounce back in and consolidate along that range, or it might um, now sit there, break out, then come back in and consolidate along that range. So I think that if it does break out, it's possibly not going to be sustained, possibly going to retrace. So I would, you know, take on Val's view of being super patient and disciplined. I don't think the pound dollar is going to do too much, especially with the idea that, you know, out of this consolidation, we do have another range, which is not very far away. So unless it clears either of these levels, then I might be thinking of a trade, but I don't think that's going to happen today. Okay, so pound dollar, nothing much. Then euro dollar, I was sharing with you all this earlier today during in the Discord channel. I was selling this down, right? I did sell this to the downside as it tested, rejected that resistance to turn down, got out of a trade there. I think it was a quite quick one, right? So I got out of a trade and then now it's bounced back up, still at that 1.09 1.0910 level. Okay, very similar to the pound dollar, right at that level, euro dollar, right at that level as well. I think that we could see it continue there. Take these away. A bit messy now. You can see I'm not even priming you guys up for um, a lot of trades today. It's possibly going to be a wait and see day. What you'd also notice is that we have this pushing to the upside. I think that out of everything, I'm possibly thinking that the euro dollar could push up. Euro dollar could push to the upside if we see that dollar weaken. But I would be considering the whether it's a sustained push, right? Overall, I think it's going to trade in this range and not do too much. So 1.0890, 1.0915, not do anything. It's not super exciting today, unfortunately, guys, but you know, better unexciting, not exciting than losing money. All right. Consolidate along 1.0910, 1.09, along 1.09. Okay. I think that'd be fair. If it does break up, I'll update you guys in the Discord channel. So it's important that you do join the Discord channel. But I'm just thinking that at this point, we haven't seen any clear directional buyers. You know, that near-term resistance is really formed. This whole thing is really forming that consolidation. Had a fake break, tested, bounced back up, bounced back up. It's just gonna, I think it's just gonna sit along this range. All right. Not again, not ruling out if we still see a sudden push on the dollar later, but for now, that looks the most likely scenario. Then on to the US Swiss franc. How does the Bank of Japan, I guess you mean Japan, how the Bank of Japan intervene to strengthen the yen? I just want to understand the concept. Several different ways. Good question there, Buba. There are several different ways they could take on market operations. They could be, buying the yen, increasing the demand, pulling it back down. They could be adjusting the yield, right? So there you go, the auction results of the 10-year JGBs. They could also increase the range of the technical term, the flexibility in terms of the yield. No, that's not the term. They would increase the range of something. They'll increase the range of or they increase the flexibility in terms of fluctuation of the 10-year JGBs. If I'm not wrong, I'll give you an update on that in the Discord channel. But yeah, Bank of Japan could do either of those to cause an intervention, or they could also just be talking about it. They could just say yen is way too weak. We're looking to strengthen the yen. We'll be taking on action to strengthen the yen. That's going to have some impact onto the yen as well. Okay. Hi, Spiros. How are you doing? So with that, I lost my train of thought. What was I saying? Okay, US Swiss franc. You would see that, so that didn't push up. Take that away. Resistance held very strong at 0.9. Pushed down for the hour, came back up. Exactly, almost carbon copy of what happened on the dollar index. At this point right now, I think that the thing, so back to Desiree's question with the Swiss inflation being less than 2%. Is it here? No, I think it was yesterday. Right, CPI month to month being at 0.1%, being with the Swiss National Bank, they haven't ruled out further rate increases, but if they do, then it's still going to be heavily dependent on the way the volatility on the dollar index. Okay, you see that it's almost a carbon copy move on the US Swiss franc. So what I'm looking at here is 0.9 is holding strong. 0.9 to 0.9020 is going to hold. Looks like it might hold strong. Could test and turn back down. For it being right in the middle, I wouldn't do anything at this point. Okay, dollar index pushing back up. That's why you see the Swiss franc pushing up as well. What I would be doing or looking for is for it to test and reject that resistance. Why? It's really just because we've seen it happen so many times. 1, 2, 3, 4, 5, 6 times. What you could be looking for is for it to test, reject, and turn back down. It is in that range. So, looking to sell at 0.90, you'd be below 90, stop loss 20 pips, take profit 40, 50 pips to the downside. All right. If it, I think that's a reasonable view. Okay. Then I'll get to the cross pairs. Sell below 0.90, stop loss 20 pips, take profit 50 pips. 20, take profit. Okay. Then next up, we'll get to the pound yen. Well, I'll do US CAD and then we'll get to the yen pairs. Same thing. You know what? Take a day off, guys. It is one of those days. US CAD going to be along that 1.3250 level. If the dollar does strengthen, not sustain, then I think it's going to push back up to this support turned resistance level, consolidate along that range. We've already seen that happening. At the most, it'll get to 1.288, 1.3280. You wouldn't want to try and do that 30 pips. So I think that US CAD is going to consolidate along that range. Sounds like a day of day. Okay, US CAD consolidate along 1.3250. That said, then we'll look at the pound yen sitting right across, right? We were saying that's going to consolidate and break down, sitting right across, still looking for it to break, not going to do anything at this point. Euro yen, same thing. Swiss yen topish. So to answer that question, it is topish, very similar to what we've seen on the other, like the euro yen and the pound yen. I think it's in that similar view. Could trade down, would need an intervention from the Bank of Japan, but not worth trying to get into that position for now, right? I think that trying that position on the US yen, right? You don't want to be overloading trying to set up for a yen intervention, because if it doesn't, then it's going to be super painful if it does continue pushing to the upside. I would say that it's going to consolidate. It has this level that it needs to break. And if it does break this point, there are several levels down. So I wouldn't try to. Yeah, I think what's likely to happen on a lot of these yen pairs is that, I'm just drawing lines right across, and you'll see that it could break a line, it could break a level, and you might be tempted to sell, but it's still the fundamentals behind it that we're seeing yen weakening. There's no reason, unless an intervention comes around, that it's going to have a big drop. So I don't think it's ready to get into on the Swiss franc, Swiss yen, or to go counter trend on the pound yen, on the euro yen, or on the Swiss yen. Okay. Then gold, right? We were looking for it to break the support. It didn't break the support. In fact, it's pushing back up. I think someone was commenting in the Discord channel that they were buying gold up, so very good move there. At this point, I think it could most likely get up to this range at 1932, at the most almost 1934. Then we might see a trade back down again. Okay, so gold, I would say, could trade up to 1934 before possible retracement. Alrighty, there we go. Okay, any questions? It's not a big trade kind of day. Not a big trade kind of day, not even very good setups. Just like what Val was saying, setups. There are some setups, but it's not super high confidence setups, I would say. A lot of speculative levels, and also as it trades within a range, we might see fake breaks and the bounce again. So just be super careful with how you do get into, if you do get into a trade. I think that with the way prices are moving, very likely be you might get fake move to a trade, right? So like a fake break, well, not a fake break, but this break, and then the next moment it bounces back up. This one might continue down a little bit before turning back up. Euro dollar and pound dollar is just within that range, so just be super careful with that. All right. So with that, I would say if you don't get into a trade, don't don't feel bad. There's always tomorrow. And if not for tomorrow, there is also, right? Tomorrow we have OPEC meetings. There is ADP non-farm on Thursday, ISM services on Thursday, and on Friday is the big one. I think the opportunity is there on Friday. So it might be a bit of a slow period all the way through to Friday with the non-farm payrolls. And then if you look at next week, we do have, the Kiwi with their raised decision, the US CPI to be released, Bank of Canada with their raised decision. That was, yeah. So a lot of other central banks to be deciding rates, a lot more volatility to come. Do take it easy today. Keep your account alive till tomorrow or till Friday. We can look at more trades there. Okay, so if you haven't already, do help me out. Click that like and subscribe button on YouTube, TradingView, Trading.live, and the link is there. Do join the Discord channel if you haven't already. So for now, trade well, trade safe, and I'll see you again. Bye-bye now.